Gold hit a new all-time record high. It almost hit 4,380. It got to like 4,378 and change. That was yesterday, an all-time record high. It took out barely the all-time record high we had set on Friday for the price of gold. And in fact, last week on Friday, silver traded above 44. It almost hit 44 and a half. We topped 54, excuse me. We almost topped 54 and a half. We got as high as, I think, 54.40 and change on Friday. Remember, the last time I recorded a market wrap, which was a week ago from Friday, silver had just closed above 50 and gold had just closed above 4,000. And so by Friday of last week, both gold and silver had added another 9% plus to those records before we had a violent sell-off on Friday. In fact, from its high to its low,
gold fell over 6% and silver fell 7 to 8% in a single trading session due to a sudden move in the precious metals market. Investors and dealers were shaken by this event. Market expert Rafi Farber called the precipitous decrease a rug pull, noting that such declines are rare even annually. Gold and silver, considered safe haven assets, can fluctuate suddenly, especially when market players expect Federal Reserve intervention. Farber believes precious metals won't rise until the Federal Reserve issues one last print, which would enhance market volatility. The current surge, which has encouraged stackers, emphasizes the need of being calm during market changes. Farber also says excessive confidence and leverage transactions worsen market swings. Leveraged funds that are 2 times or comparable can yield high returns during rallies, but abrupt losses can cause a violent feedback cycle. Unchecked excitement and overexposure can lead to costly mistakes, the analyst warns. He also advises participants to avoid panicking during declines and overconfidence during expansions. This careful approach is necessary in a market more sensitive to mood and external economic factors. In addition to investor behavior, global silver market structural difficulties cause instability. India has bullion shortages, and U.S. refineries have backlogs. This has created a fragmented distribution network that cannot handle unanticipated demand increases. Heavy investment in physical silver, which is targeted for industrial use rather than public purchase, might cause price volatility. Farber warns that systemic banking duress, emergency Federal Reserve operations, large-scale quantitative easing, and supply problems might cause significant market reactions. These scenarios would affect precious metal prices, interest rates, and currency markets, possibly signifying the start of a financial crisis. Rafi's interview snippets follow. To get timely information, subscribe to our channel and click the bell. Hope you enjoy the video and thanks for helping.
Yesterday, gold hit a new all-time record high. It almost hit 4,380. It got to like 4,378 and change. That was yesterday, an all-time record high. It took out barely the all-time record high we had set on Friday for the price of gold. And in fact, last week on Friday, silver traded above 44. It almost hit 44 and a half. We topped 54, excuse me. We almost topped 54 and a half. We got as high as, I think, 54.40 and change on Friday. Remember, the last time I recorded a market wrap, which was a week ago from Friday, silver had just closed above 50 and gold had just closed above 4,000. And so by Friday of last week, both gold and silver had added another 9% plus to those records before we had a violent sell-off on Friday. In fact, from its high to its low, gold dropped $180 intraday. I had never seen a one-day move that big in dollar terms until today. But let me finish up on Friday before I get to today. So we dropped about $180. Silver dropped about $2.50. but still managed to close the week. I think 51.75, record closing week, up 3.5% on the week. Gold closed the week despite that sell-off, and it ended up down about $75 on Friday. Gold closed the week above $4,250. So adding $250 to the 4,000 close that it hit for the first time at the end of last week. So everything was going well until that Friday, but we still had a good close. But what happened on Friday was a lot of people after that big reversal, a lot of people were saying the bull market is over. That's it. Get out of gold. You got to sell, especially the crypto community. I've never heard them so united against gold as they were on Friday. And they were so excited to proclaim the gold bull market dead because they said this is the beginning of the rotation out of gold into Bitcoin, which, of course, is more wishful thinking and a bunch of hype. Yeah, they really want people selling their gold to buy their fool's gold to kind of prop up the price because Bitcoin is not really doing anything recently. In fact, it's been in a big bear market relative to gold, collapsing by, I think, over 30% relative to the price of gold until the last couple of days. Now, after all of that negativity, and in fact, I watched over the weekend, Bill Maher did his weekly show, and he had Andy Ross Sorkin and Mark Cuban were on talking about gold and mainly just making fun of it, right? Not taking it seriously, kind of laughing it off. In fact, it's not just the Bitcoin community that was united against gold. Pretty much everyone on Wall Street is trying to label this, a momentum play. Gold is like a meme stock. People are just buying it. They get carried away. There's a lot of speculation. When that's not the case, not at all. I mean, we finally got some media attention when gold got above 4,000 for the first time. But most of it was kind of skeptical as to why gold was rising and not a lot of concern being expressed as to the warning that 4,000 gold may portend. Anyway, so on Monday, following this sharp sell-off, gold rallied $120 intraday and closed up about $105 on the day. So made a new high barely from Friday and closed at its all-time record high close. I think we closed around 4,360, something like that. I mean, the highest daily close ever for gold. Silver didn't totally recover, but it still managed a nice day, closing above 4,200. I mean, closing above 52. I'm getting my numbers confused here. Closing above 52. So again, very strong, yet more negativity about gold, trying to scare people out of gold, get people to get rid of their gold or not to buy gold who might have been thinking about it. But today was the topper because this morning, gold and silver got hammered dollar-wise like I've never seen. So gold at one point was down close to $300 on the lows. I mean, not quite. I mean, maybe down 280-ish, something like that. We got, well, maybe no, 260 might have been about the low. We got just below 4,100 on gold, and we settled at about 4,125. Now, despite this 6.5% decline in the price of gold is still above 4,000. The price that gold closed today would have been a record and was a record when it got to this price last week. So all we did is crash to the record highs from earlier last week. But I think this is going to do enough damage to the psyche of some potential buyers that they're going to be scared out of this market when it rises to 5,000 and higher. I mean, that's what this type of decline does. Now, with silver, it was even more dramatic. Silver was down about $4 on the low today, closed down about 370, back below 50 at 48 70-ish. So silver wasn't able to hold 50, but gold held 4,000 like a champ. And I really think that when it comes to gold, 4,000 is the new 3,000 because gold's got real serious money buying it. And I think there's enough money to keep gold above 4,000. That doesn't mean it can't trade briefly below it like it did after it topped 3,000. You had, times where gold got a little bit below 3,000, but it was a great buying opportunity.
Despite the recent market volatility, gold has maintained a price above $4,000, as evidenced by the steep declines that Rafi Farber has identified. Peter Schiff, a market analyst, emphasizes that these pullbacks are indicative of a maturing bull market rather than indicators of a reversal. He emphasizes that corrections in gold and silver present strategic opportunities for disciplined investors to increase their positions, as both metals continue to garner substantial interest from institutional and long-term purchasers. Schiff also observes that silver, despite its increased volatility as a result of increased retail and speculative activity, remains fundamentally robust and continues to bolster the longer-term favorable trend in precious metals. Schiff also underscores that the short-term weakness in mining equities has been revealed by recent market movements. The margins of mining companies are being enhanced by the comparatively stable energy costs and the increasing prices of precious metals, which presents a potential opportunity for investors who are willing to act strategically. He also associates the performance of gold with alternative assets such as Bitcoin, implying that gold's ongoing resilience may function as a stabilizing counterbalance in the face of broader market conjecture. According to Schiff, corrections in metals and mining equities should not be perceived as a warning, but rather as an opportunity for disciplined investors to strengthen their positions during the bull market's continuation.
If you're trading with options or using leveraged ETFs because you want to use gold and silver investment vehicles to increase your dollar holdings, then yeah, it matters a lot. But if you're in this for the end game because you see that the dollar is going to die, then no, it doesn't. And then in that perspective, it's not gold and silver really moving at all. Silver moves a little bit. Gold doesn't move. It moves. Everything moves. But relative to other things, gold moves the least. And so it doesn't really matter because we're not in this for dollar gains. We don't stack to earn dollars. We earn dollars to stack so that we can get out of the system, and that hasn't changed at all. LA or in a big high rise where the community is probably not going to work so well because people in very, very large cities don't really know any of their neighbors. And if they know one or two guys in their building, they don't know the other 98%, 99%. You have no idea who's even living in the same structure as you.
Right.
And if you're in suburbia and there are people that are not cooperating, I mean, I just buy them out. If they're not, if they're gonna, people who don't have gold and silver are gonna be very poor. Most people are not going to have. I would take these as givens. People with gold and silver, people with money, they will probably also be helpful in a community setting. If they don't have skills, they have capital to hire people with skills. But most of them will have skills because the stacking type, they also stack skills. They also want to learn how to do things. So if there's someone who's not cooperating for whatever you need to be done, then just buy him out and get someone else in his place. It shouldn't be that hard because we'll have all the capital to do that. In terms of specifics, what's going to happen in little neighborhoods and how big a community is going to be, and whether it's going to be like everyone has their little territory and we break up into little fiefdoms. I don't know exactly what's going to happen. I don't think it's going to be that extreme. I think the U.S. is going to break up into several different political entities, but I don't think it's going to be neighborhood by neighborhood, Mad Max style. I just think we have too much technology that is stable for production kind of break down into a complete Armageddon. I don't see that happening, but I do see some violence. There's definitely they can't pull a COVID again in that way.
Right.
And the other thing that we have to keep in mind is that pulling a fast one on the public is very expensive. In order to get people to convince people that they have to stay in their houses for even 2 weeks or longer, or however long it lasted, and not send their kids to school for a year and have them lose their childhoods and disturb their language acquiring abilities and put masks on so they can't see speech and they can't read people's lips, so their speech is slurred, and all the ways that we damaged children back then,
Right.
even with injections or not, and everything else that we did, it cost a lot of money. They had to pay people to stay in their houses, and they don't have it anymore. If they try to propagandize the entire world with a bunch of lies, they'll need a lot of money to back it up. Otherwise, people won't buy it. They'll
Right.
only buy it if they're going to be paid off. Um, so are people waking up? Most people are not, but you don't need everyone to wake up. You need about 15-20%. And I think we're close to those numbers of people that they don't know exactly what happened. Maybe they don't think it was a complete scam, or maybe they think that the vaccines were a little bit helpful but didn't really do everything that they promised, or even those types of people we can consider them, more on our side, and nobody has to understand everything. They just have to be a little bit skeptical, just a little bit. And I think we have enough of that they can't pull this again. COVID was really the tip top of government power. We're not going to see that again.
It was just crazy how many people initially fell for it, and like who were, because I remember going to the gym and people would look at you like you were killing them if you didn't wear a mask. Like they thought you were just a menace to society. So
Yeah.
it's just crazy.
Yeah, and I was fooled at the very beginning. I was like, well, 2 weeks to flatten the curve. Okay, well, I'll give it 2 weeks and then I'm out. Like
Right.
I did give it something because I didn't know what was going on. But even with mask at the beginning, I was like, this is just dumb. Like, don't people see this as dumb? And then
Right.
I put one on, and I was like, it's hard to breathe in. I'm not wearing this thing
No.
just to make somebody feel better. I couldn't stand it. Even at the very beginning, I was like, there's no way, even if the virus is real, and even if it's really deadly, that a mask is going to do squat. It's not going to do anything. So
Yeah.
I put it on for maybe like a day, and I was like, forget it. This is just retarded. What do I have my eye on specifically right now? Well, I mean, I was kind of rug pulled by the action in gold and silver today. It's pretty noteworthy what's happening. You don't see this every day. You don't even see it every year.
Right.
Gold going down like 6%, and silver is 7-8%. I've seen before. That's more I wouldn't say it's frequent, but it happens a lot more often than gold going down 6% a day. And what concerns me, I guess, from today is that people don't want to understand and internalize, even stackers, that gold and silver are not going to go up and up and up every single day until and unless the Fed prints one last time, and they will. They will.
The market is expected to undergo a period of selective repositioning and accelerated accumulation as a consequence of the recent volatility in mining equities and precious metals. Over the medium term, it is anticipated that sustained upward trajectory in both gold and silver will be supported by elevated interest from institutional participants and supply constraints. The profitability of mining companies may continue to increase as a result of manageable operational costs and favorable pricing. In the interim, the persistent volatility may serve as a filter for speculative activity, resulting in a more stable base of long-term investors and establishing the foundation for renewed growth in both physical metals and associated equities. In the future, these dynamics may contribute to broader systemic effects, such as a stronger demand for metals as a defensive asset and increased hedging activity. Market participants who adhere to disciplined entry strategies may capitalize on compounding returns as prices alter to satisfy both industrial and investment demand. Periods of increased price movement and strategic opportunity are likely to result from the intersection of metals markets with policy developments, currency fluctuations, and macroeconomic trends. In general, It is anticipated that the recent correction will enhance the precious metals complex's long-term outlook, thereby preparing it for potential record levels. While emphasizing the significance of precise sequencing and portfolio management in leveraging market cycles. Please share your opinions on the analysis of experts in the remarks section below. If you find this video to be informative, please consider supporting our channel and activating notifications to remain informed about our most recent content. I appreciate your attention.